Well, hello again. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is the 7th of July. We're on the last day of the Alisal Guest Ranch Blanke Schein Thompson family vacation. We take a 1-week trip on this dude ranch where we do horseback riding and fishing, and ultimately it's a lot of family time. We had a wonderful trip. We'll be back in the office tomorrow. But I wanted to provide a video update for today, 3 topics that are moving the market. So let's get right into it, and thanks for watching. So we're seeing markets continue to provide some resiliency as it relates to shaking off the coronavirus headlines. We're seeing increased cases, and if you increase cases, mathematically the death rate's coming down. So we're also seeing that play out. I think that's what the market's looking through, even though we see hot spots. Another thing, in mid-May, there's reports and studies that are showing that the guidelines were refined as it relates to cases. And so this is very interesting. We're going to spend a lot of time looking at this. We actually have a mid-year review coming up next week. So mid-year outlook, it's a live video update that I'll provide next Wednesday. So please register for that. You'll see emails as it relates to that. And we want everyone to participate with my online webcast. And it's a mid-year outlook for 2020. You know, one of the things we're going to discuss is in May, CDC and other guidelines have just been revised to actually one case went from actual to probable. It's a little nuanced, but you're seeing all these hot spots, all these spikes of cases. And it's what that essentially means is for every one case, they're actually adding 15 as a probable to the case count. That's good because in the short term, everyone wants to be cautious and add more cases. But what they don't realize when they change the math is that, quite frankly, if we continue at that pace, so for whatever positive case, 15 are added to the possibly infected, not actually infected, that's a major difference right there. We're going to exceed the U.S. population by case count in less than 15-20 days if at this rate, meaning it's a 15-to-1 positive. That means possible. So I don't know if CDC actually realized that we could actually have more coronavirus cases in the United States based upon that new math than we actually have 320 million people in the United States. Quite frankly, we're gonna run out of people, and we're gonna have more cases than people. So I think markets are sort of vetting this out, but the other challenge becomes the teachers union for the fall is meeting to discuss whether they want to come back and actually teach. I'm sure everyone wants to teach. We want our kids to be, in school. But again, I brought this to the forefront where the fall is really going to be the litmus test for the economy, because if kids can't get back to school, and parents can't get back to work, not to say that we're going to go back to work in the fall without some sort of hybrid approach anyway, but really it's a 1 and 2 linchpin within the U.S. economy. And keep this in mind, right now we have 22 million kids that depend on school for breakfast and lunch and almost dinner in some cases. So there's a lot of kids right now in America that can't go to school just to get the 3 basic meals a day. That's a huge problem in itself. So we're having kids that can't get fed, and we have kids that aren't being taught. We have an economy that's trying to go through fits and starts. We have sort of the World Health Organization and CDC coming up with guidelines that is changing on the spot. In fact, the Pediatric Association today just said that 3 feet social distancing is adequate for teaching, but yet we've been doing 6 feet. So it's kind of interesting to see how this is all playing out, because there's a lot of unknowns, unfortunately. But we need our kids back in school, and we need to start educating and finding a safe way of doing that, regardless of how this plays out. So that's a big deal. We're watching that, and that's going to be continuing to play out. It's going to continue to be a political issue, and unfortunately it shouldn't be. We should just find a way to educate our kids and find a way to feed these kids that need to be fed, because on a go-forward basis, the more cases we report, the lower the death rate becomes, and that's the statistical fact. So markets are seeing through that. And finally, there's about 4.8 trillion in money market right now, which is close to the most ever, if not. Again, money markets are paying a little bit better than banks. Banks are paying us nothing. So that's a lot of money that the Federal Reserve knows if you keep interest rates low, it's going to be forced out. And we saw more bond purchases in the month of May than we have in, I think, all time in some of these ETF vehicles. So we're seeing a lot of that play out. There's about 4.8 trillion in money markets. That's going to continue to work its way in the economy. Now, don't get me wrong, there's still going to be a lot more volatility ahead, and there's also going to be a lot more opportunity ahead. and we're not out of the woods. So this is going to be a bumpy road on a go-forward basis. That's how we manage portfolios, sort of thoughtfully and carefully, and we'll continue to do so. So thanks for watching. We'll see you back in the office tomorrow. Bye-bye.